All right, this is Vishal from Uncharted FX, and take a look at this weekly candle that we had for this week on the S&P 500. Unless you've been living under a rock, you've probably heard what's been going on in the financial markets. The coronavirus fears are spreading. We're hearing about tons of cases in South Korea, and at the time of recording, we just had the first coronavirus-related death in Washington State in America, and we are hearing a lot about Italy. The Japanese have shut their schools down starting this week until mid-March, and I'm hearing that they're also shutting a lot of tourist areas and like, for example, Disneyland. And now there's even rumors that perhaps the Olympics may be canceled, postponed, something like that. I mean, I'm not too sure on what's happening there. But I'm just scrolling back here, and I just want to show you the strength of this weekly candle. We haven't really had anything like that since, or a fall like this, since the great financial crisis, but just the speed of this fall, and we basically erased gains from October 3rd all the way up to February 20th. We erased those gains in about 6 days. So just shows you the amount of volatility, the fear, and what it's leading to, and I'll get to that in just a minute. But before I begin, please hit the like button and hit the subscribe button if you haven't already. It means a lot to me and this channel, and to get this information out there. And also, do take a look at the blog, and if you are a trader, feel free to join the free Discord trading room that's provided in the description below. There's a link in the description below, but please join us. I'm always there during US market hours, and I do occasionally post things every 4 hours on the 4-hour charts if there's anything that grabs my attention. I am a swing trader, and I do, as I said, I am quite frequently posting there. But let's first of all look at the calendar quickly. Let's just get this out of the way because we got a whole bunch of other things to talk about. But we do have Chinese manufacturing PMI data for February. Again, will be interesting. We're seeing here that the consensus is that it will be lower at 45.7. We have US manufacturing PMI, so 50 is the big number around, if it's generally above 50, that's okay. If it's below 50, problems, I guess, or well, not really problems, but it's less than expected. So we may see a print below 50 here. We have the Australian interest rate decision, and these decisions now are going to be very interesting. So you can see here there's going to be no change. The market doesn't expect a change. We have some preliminary data here, but we also have Aussie GDP for Q4. Again, will be interesting. Canada's last week, Canada had their Q4 GDP, came out at 0.3%, lower than expected on Wednesday. And this is a big one. I am Canadian, I live in Canada, so this is something I'm going to be watching. It is the Bank of Canada interest rate decision, and I will speak about this when we get to the charts. Some interesting things about to happen here. Of course, we are neighbors to America, of course, and they're our largest trading partners. And there's a big currency flow between the Canadian loonie and the US dollar, and interest rates are very important for that. And what else do we have? We have a couple of governor speeches on Friday, and then we have, of course, because it is the first week of a new month, we always have the US employment numbers, or non-farm payrolls, and we also have the Canadian employment data. So we'll be quite a busy economic calendar this week. Don't forget, there's election stuff with the Democratic primaries and such, and we also have there's going to be tons of coronavirus related incidents or cases and news that you're going to hear. But I want to point or direct your attention here to the CME Group's Fed Watch tool for the Fed futures. And last week, the beginning of Monday, if you're on the trading group, I posted the chart, and there was only a 20% chance of an actual rate cut to the 25 basis point rate cut to around the 1.25 to 1.50 Fed funds points, and the current target rate is of course 1.75. And as the week went by, it started to up the probability of a rate cut, and then we heard from Fed Chair Jerome Powell, and he just basically said that the Fed will do whatever is necessary, and many people saw that as a cut. And you can see here now, March 18th, the FOMC meeting for March 18th, the chance of a cut now is 100%. And not only that, it was Goldman Sachs, I believe, that came out and saying now that they expect a 75 basis point cut. So essentially 3 cuts if we're doing the 25 basis point cuts every meeting. They expect a 75 basis point cut by June. And you can see here, if you go to April, so already pricing in next month's, well, it is, the 1st of March. So April's Fed futures, we are already having a 73.2% chance of a further cut into 0.75 to 1. So the market is expecting a 100% cut, and you can see here it's a 94.9% chance that the Fed will be cutting 50 basis points, not 25, but 50 basis points. And this is very interesting because going back here to the Bank of Canada, 1.75 we're expected to hold. However, now the Bank of Canada knows that the Americans will be cutting come March for sure. Right now we're in equal terms at 1.75 and 1.75 in both nations. The Canadians generally want a weaker Canadian dollar, which means they do sort of want a weaker interest rate. Just the way money flows, right? Generally, I know all this is now different in the world nowadays, but generally a lot of money flows towards the higher interest rate, right? Because you get a better rate of return. But I've already written a lot on why I believe the dollar is actually going much higher, and even I think that part of the reason that they're cutting rates is they're trying to weaken the dollar, but in the end it might not work. And you can read my idea or blog post called The Tale of $2 on my site about this. I think it's a very important read going forward. But we know interest rate cuts are coming. A previous Fed chair for the Bank of Minneapolis, I believe it was, named Narayana Kocherlakota, also came out saying that the Fed should not actually wait till March 18th, but should do an emergency rate cut. I don't think that's going to happen, because I believe if we do see an emergency rate cut, I think that would actually cause more panic, because you got to, again, remember that this is a confidence crisis issue, right? I've always said this, and this is why I'm bullish on gold. These fiat currencies, they have an issue when there's a confidence crisis in government, in central banks, and in the fiat money itself. And if the Fed came out, I believe, cutting interest rates, as an emergency measure, I think it would cause much more panic and much more fear. And again, folks, don't forget that there's also another issue going around with the plumbing of the financial system, as people like to call it. There is an issue going on with the repo market as well. And if you have been a follower of my work, I have always been saying that the most important charts to watch is actually the bond market, because the debt market is the biggest bubble. Debt is priced, worldwide debt is 250 trillion, whereas the world economy is just under 90 trillion, 88 trillion. So it tells us that more debt is required just to even sustain where we are and even to grow a bit more. So let's just quickly look at the Canadian debt market here, and this is why I'm not saying they're going to cut rates, but it will be very dovish. I mean, they could very well surprise us. But again, folks, as bonds go higher, interest rates decrease, meaning people are, pricing in potential rate cuts. And you can see here the XBB, which is what I use for the Canadian bond market. We are testing previous all-time highs here, and will we see a breakout? This could just be telling us the Bank of Canada obviously will be very dovish. And once again, if you have followed my work for quite some time, I've been saying since last year, I believe the best trade would be buying Canadian bonds and shorting the Canadian dollar, just because I believe no one is really pricing in the Bank of Canada's rate cuts, while the rest of the world is cutting. Canada is not immune to what's going on, and they will also be cutting. And quickly, let's just look at the US dollar, and you can also see here, let's go on the daily chart, but there was a breakout here of this big 133, let's call it, 33 level here, 33.25 level here. Not something I would trade. Again, I look for very well-defined trends like this, look for some sort of pattern before entering. This is really nothing that interests me right now, but it is showing us that perhaps we will be seeing a much more dovish Bank of Canada, perhaps sitting on their hands this week, but then for the next meeting, there'll be a 50 basis point cut. Not a 25, but probably a 50 basis point cut, just because the Americans, as I said, are expected to cut 50 basis points. So speaking of the bond market, once again, if I do encourage you to join the trading room, but I have been posting this, and you can see here the 30-year government bonds, lowest it's ever been in history. I mean, this is just absolutely crazy in my opinion. And also even the 10-year. Big level broke down, lowest it's ever been. I did talk about this in the past. Are we going to actually see interest rates spiking? I was saying not yet, but this is what Ray Dalio speaks about. One day there will be a point where you should not be holding bonds. It makes no sense to hold bonds, pretty much, right? So what you're seeing essentially is, risk off, risk on. On a risk on environment, money just goes into stocks. On a risk off environment, money goes for safety, and it generally goes into bonds. So this is, again, folks, why we watch the bond market. And again, I follow BND here. Big all-time breakout here. So now bonds are going into all-time highs. And I've been saying this for quite some time, but you watch these markets and you watch the bond market. Many times this week we had, and I'm just going to go into the lower time frames here, but we had some, it looked like, we were about to get a bounce here on the 4-hour. However, the bond market was still moving higher, and that is a sign that this move lower is not done yet. What we want to see is bond markets start to drop, and what that will tell us is that money is leaving the safety of the bond market, and it has to go somewhere. Again, I make some arguments that it'll probably go into gold, maybe not right now, but into the future. But a lot of that money will be going back into stocks. And again, folks, as the Federal Reserve cuts interest rates, there is nowhere else to go for yield except the stock market. And, is this going to work though? Cutting rates, will it work? I don't know. I think, more debt is not the solution, but this is the world we live in. More cheap money, more money printing, more QE. And this is why I think a confidence crisis is going to come. And, I'm a bit suspect. I've always been saying that some sort of event will have to come, because if the Fed goes, well, first of all, the Fed and the government have been telling us that this is the strongest economy ever, booming economy. And if they had to cut rates and go back to QE, they had to do it in a way to avoid a confidence crisis. People would be like, hey, wait a minute, you've been telling us these things, but now you're doing the opposite. Even though, they were cutting rates when the economy was booming, which is sort of the opposite to economic theory. And this coronavirus is a great way for them to now save face. They could say all our policies were working. However, this happened, and now, sorry about that, we have to go back to QE and cut rates when we don't want to. But of course, we know that that was the plan all along. They want to cut rates because they're running out of tools, and they want to go back into money printing or QE to suppress long-term interest rates. And essentially, you have to remember, QE was this one-time desperate policy to avoid 1920s and 30s like recession. To say we're back on it would tell people that it didn't work in the past, and now they will realize that basically we're in this environment forever. People are addicted to cheap money. Interest rates are never going to normalize. We have to be in a low interest rate, zero or even negative interest rate environment with more money printing. And, that's the confidence crisis. People will realize that. And I just find it very, Rahm Emanuel, who was President Obama's chief of staff, even said, never let a good crisis go to waste. But this coronavirus thing is, helping a lot of people, I believe, in terms of government and central banks as a way to save face. It might have an issue with President Trump because I've been saying he needs a stronger stock market. And he has to avoid a recession to be reelected because, of course, folks, elections are all about economic cycles. If the economy was as strong as President Obama and the Democrats said it was, Hillary Clinton would have won the 2016 election. It wasn't because a bunch of racists and white people voted in President Trump. It's always about economics. So this is going forward. I see a lot more, volatility. Am I going to be playing the market this week? Very likely not. As you can see here in a lot of the charts, we have large moves here to the downside. And again, I just want to go over the way I trade, the higher low, higher high. So I look for trending markets with a higher low and higher highs here, and that's the only way markets, it's one of the ways markets move. Again, markets only move in uptrends, downtrends, and ranges, and our job is just to break those components and jump in when we see a reversal. So you can see here, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher low, higher high. This was our last swing here, our last higher low here. This is why I have this point here, and we broke below it, and you can see, just according to this basic market structure, we should be expecting lower highs, lower lows, lower highs, lower lows. And, I'm on the daily chart, which is the long-term chart, and it is the most important. Basically, whatever happens on the longer-term charts trump everything else. So, even though the 5-minute, 15-minute, 4-hour, whatever can show what looks like to be a bounce higher or a move higher, this is the chart you want to watch, because on the daily we have yet made our first lower high swing, and that is something I am watching. I'm looking for a lower high swing to occur, so this would probably be a bit of a dead cat bounce type situation. And really, there's no for me, the only time I would go long is if we break and close back above this previous breakout zone here, because as long as we're below this zone here, we are technically in a downtrend and can make a lower high swing. If we do break and close back above here, then we are pretty much we've given up a lot of these gains and closed back above this breakout zone, and I would expect a new highs, right? So what's a way to play this? Again, I'm just going to be pretty much patient this week, and you can see a lot of pairs this week are very volatile. There's been a lot of extended moves, so it is a week where I'm probably going to be sitting back a lot and just watching what's happening. But again, folks, just be patient at times, and a lot of people will be drawing fib levels. So this is a fib level here. We can be watching these zones, see how price reacts at these three areas here. Of course, if it's a very, very bearish move, generally we see price react at the 38.2, right? When we see a reaction at 38.2, it indicates that the trend or the move in this trend is very strong, which of course in this case would be a downtrend. So what does that mean? That means we will be breaking below previous lows here, and we have further targets here as well. But again, folks, this is not a trade recommendation. We have to be patient. We have to see how the candles present themselves. And of course, the safer way to play this is to actually wait for a lower low break down here, right? Because that's what confirms the swing, which would be a lower high in this case. But your probabilities of a trade increase, but your risk to reward may decrease. Whereas here, if you take some sort of bearish candle here at a fib level, yes, your risk to reward is going to be much more higher, but the probability of success is not as high as the confirmed lower low break. So there's two ways, as I said, you can play it. I'm going to be mostly patient this week, and as you can see here, a lot of markets are sort of showing the similar patterns here. We are bouncing, in some cases this is the Dow, we are bouncing at a very important support level here. But again, folks, we have yet to make our first lower high swing, and just according to market structure, we should be making a lower high swing, because nothing moves down forever, nothing moves up forever. But this is why I'm a bit worried, because this move is very extended. Again, generally we would like to see lower high swings on our way down to very important flip zone level. So this is a very important flip zone level here. That did not happen. So of course it has, my attention, and as I said, I will likely just be sitting with my hands to the side and just watching what happens here on the equity markets. And as you can see here, I'm going through a lot of world indices here. This is actually an interesting one. So this is a way we can actually play the fibs, as I was mentioning. But you can see here higher lows, higher highs here, and then we had our first move down, and we have not yet made our first lower high yet. And you can see here, we even came back to test this zone. I mean, some may argue that the better higher low is actually here, because we have a higher high here. But I think this higher low is a good one to work with, much more established. And essentially what happened here, and I'll fib here from the high to the low, and you can see here price did reject at the 61.8 fib, and this was a trade I did take, not on the fib, but I did take it on the 4-hour here. On this break here, I did close my position pretty much just as this candle was going higher. I don't like to hold over the weekend, especially in this environment. So I did close my position here, but it's funny, the China 50 is sort of doing its own thing, but on the daily, we are still watching for our first lower high swing here, which means we will possibly break below these lower lows here, because again, a lower low is what confirms the lower high swing. So a way we can actually use the fib here, and it could be what we may see on the American and European equity markets. But again, most of these markets are at big levels here. Just be patient. As I said, because it's contrary to the trend, I do not really want to play a bounce. However, saying that, as I said, if we see the bond market start to drop a lot, and it's telling us that money is leaving the bond market, then we know that money is coming into the stock market, and that's what I would like to see if I was going to maybe play some sort of pullback or type move. But again, if we see a green candle and we see the bond market is still moving higher, then to me, the move is not, sustainable. It's not. It's going to be very hard to hold on to gains in the stock market if we see bonds also moving higher. So that is what I am watching for this week. A lot of people are sort of frustrated on gold and silver here. But again, I'm not very worried as long as we stay above 1450. This is the higher low swing that we are working with, our first one, and we expect a second swing to be made. And a lot of people are like, oh, big weekly drop. But as you can see, we just came back to retest some, previous support level here, are now resistance turned support. So I'm not very worried really about gold and silver. I still like it as a long-term hold. I don't really trade gold and silver futures too much. Again, I see it more as a long-term physical bullion. That's where you want to be. Silver is a bit more worrying. Again, this was a very big zone here that we were watching to see if we would break out, but as you can see, big weekly candle back to this level here, and let's see what happens here. This is a bit worrying. I think this is the level that I would sort of want to play with here anyways, at 16.13, but this is a very we tried to make a higher low swing here, but you can see here we just could not break above a lot of these wicks here to confirm a higher low. But you can see here price did bounce from here. So this week is going to be crucial to see where these candles close, and we will watch to see what happens. Copper, very, very interesting. So this is the weekly chart. I want to show you where we are in the longer term picture. Very important zone here around the 250 zone. And what I'm watching, again, folks, higher low, higher high. We have yet to make our first lower high, which we could be making here. Again, just a big downtrend here without any swing, and perhaps this is what we are going to see. If the coronavirus is causing closures of borders and supply chains, all that kind of stuff, of course it means the economy is going to start seeing recessionary trends, and copper is known as Dr. Copper because it sort of gauges the health of the world economy. And we are watching this very big zone here, as I said, the 250 zone, very crucial for copper that we will be watching. Oil also at very important zones here on the US, West Texas and Brent, but again, nothing really I want to trade because we already have multiple swings here on the downside. So again, most of it is just going to be me sitting on my hands this week, awaiting for certain patterns. Here is natural gas, very, very important support zone that we are testing. And what I would like to see now is to see some sort of maybe reversal pattern somewhere here. You know, hopefully we see some sort of range consolidation, head and shoulder, double bottom or whatever, and we can play the natural gas move. But again, folks, wait for that pattern to show itself. Maybe we will see some sort of bounce, drop, and then we have a head and shoulder here on the daily. That would be ideal, but again, just wait for the pattern. And if you are in the Discord chat, of course I will be alerting you to that. Wheat was something we played. I already taken my profits at this zone here. This is where my first target was, but again, we should still expect one more lower high swing, just because we are working with one swing here, and perhaps we will see another lower high swing on the way down. As you can see here, the uptrend is made of multiple swings to the upside, and we only have one right now to the downside. So I'm watching that. The dollar is very interesting to me right now. I'm not really saying anything about it right now because we are still working with this higher low swing right now here. We had a move that's sort of like a pincer or a tweezer move, or a V top. It just shows you, a lot of volatility without any pullbacks and swings. So for me, it's not something I would trade. I'm still watching this. I do believe the dollar is going to be going higher, even though the Fed is going to be cutting rates. Money will still be running into the dollar for treasuries because it is still the only fixed income that is yielding a decent amount. And also, the US stock market, again, the US economy compared to many other countries in the world is actually still better. And, Martin Armstrong talks a lot about this, about foreign money still looking to the US. And what we are seeing here was a rush of Asian money and European money, more Asian this time. A lot of European money has already been running into the dollar, and this trend will continue. So again, folks, a lot of patterns are very sort of exacerbated and extended. So it's just me, watching to see what sort of develops. Some patterns to look for this week. Pound US dollar had this break below this level here. Is it something I would trade? Again, this pattern a lot of people have been watching. I would maybe like to see some sort of maybe retest before moving lower. Maybe not the best thing. I'm still watching the Aussie New Zealand dollar. If people follow me on my trading view and also on social media and of course the Discord chat, we've been watching this for weeks now. We are still waiting for this break here, a very good pattern, and I still am very positive and optimistic about the Aussie New Zealand, but it tells us, be patient at times, and you will be rewarded, and that's sort of the key. A lot of people are jumping into moves, trying to chase moves because the emotions and the volatility is just crazy right now. Control yourself, discipline yourself, stick with your strategy, and you will do well. This is pound Japanese yen. Again, very important, similar looking pattern to the pound US dollar. Perhaps we will see some sort of swing being made before we move lower, but this trade actually looks a bit better because you can see here this daily close was below a lot of these other bodies here, but this was a big flip zone that we were watching. So it is valid. Again, is it something you'd want to take? That's up to you. I do like the Swiss yen. Nice pattern here as well. Big sort of flip zone here. That's been resistance and support. Going back, you can see it was a very important zone as well. And yeah, let's just take it back so you can sort of see here. And essentially what we're waiting now is for this break and close below. We do have even a double top type pattern after a very strong uptrend, multiple uptrend, multiple swings in an uptrend, sorry, on the way up. And we did also hit and reverse at a big key resistance / flip zone level as well. So a lot of confluences here. Now we just remain patient, wait for the break. Ideally would like to see a bit of a pop before we break and close below. So as you can see, a lot of other trades, and this is the Euro Swiss that I've been watching for quite some time. Some sort of bottoming pattern here, maybe an ugly sort of head and shoulder or cup and handle type pattern here. Nothing really triggered until we see that break. Very important flip zone here as well. That's been support and resistance. So we are awaiting that break there. Pound Aussie and Pound New Zealand are more on the daily, but we're looking for fake outs. And I've been talking about this. I did take a premature trade on the Pound Aussie on the 4 hour and I got punished, but you can see here the daily is where the fake out is happening. And if you are taking a trade on the daily, you have to await for the daily confirmation. And you can see here we tried to break higher, but we got a fake out twice. So these large wicks are very telling. For Pound New Zealand, I'm watching for a break and close back below this zone here. If we get a close below this candle, that's quite important. But I think that's where I had it. So good sort of a flip zone area. And Pound Aussie as well is sort of looking even better. I like this pattern actually a bit more, but we have to see a close below this daily candle here to confirm this large wick. Again, large wicks don't mean anything until we see the subsequent candle. Yes, it can tell you that there is some selling or whatever, but it really depends on the next candle. And here's a case as well. This is what we call a fake out. A lot of new traders were chasing this move on the Aussie CAD lower, reversed and closed back close to this support zone area here. So I am watching this for some sort of pattern here. If we actually do see a 4 hour close back above this candle, right, the fake out candle, if we see a close here, then that might be a sign to get in a bit early. But nice bottoming pattern here on the Aussie CAD, and we are seeing the same thing here with the New Zealand CAD as well. Nice fake out candle, some sort of consolidation pattern, and these are type of patterns that we like to watch. Other than that, as I said, cryptos, pretty much everything went down, and a lot of people are blaming it on leverage and margin calls. But cryptos, again, Bitcoin, again, folks, higher low, higher high, higher low, higher high, and we have yet to make our first lower high yet. So it does look like, folks, that we are going to make some sort of swing before maybe reversing around the 7,000 zone here, sort of an important flip zone here. And again, folks, the secret is you can use your line charts here, and you can see that there's a big flip zone around here at 7,500, let's call it. But it's a zone, right? You can see that there's a very important zone around here. So that's what we are watching. Perhaps some sort of, like I said, lower high, because it's just the way market structure moves and it takes us, and these zones act like magnets. Ethereum was also something we posted and talked about. We talked about it on the 4 hour. We were watching for a break and close below here. We had that break, and we have yet to make our first lower high swing, which we may be making actually now with this close here. So with the cryptos, still looks like we are awaiting for a move lower here. So for Ethereum, big sort of flip zone around this area, going back here. So the $200 195 zone, let's call it. So the cryptos look like they are still showing some signs of weakness. But again, folks, as I said, a lot of extended moves, and some of these yen pairs are at important levels, and it's just going to be a lot about watching and seeing what happens. But of course, all eyes are going to be on the equity markets, and just what a time to be trading or watching or observing these markets. It really is fascinating and exciting. And again, people, try not to let FOMO take control of you. Stick with your trading plan and discipline yourself, and that's what I am doing. I am just sitting back and observing. But of course, you can see there are some pairs and some trades that I have on the radar for this week. So again, folks, like and subscribe, and please join us at the Discord chat. The Fed is cutting rates, and if you have followed my work for previous years and my blog ideas, I have been talking about this since last year. I am a classical economics theorist, I guess you can call it. So I look at money supply and interest rates, and I have been saying that these central banks are pretty much out of options, and they do not have much ammunition left. They have to cut rates. They have to go back to QE. They're probably going to bring a digital currency in because that's how they can sort of keep this system going, which means more taxation, because the socialist economists, they know if they just give everyone a lot of money and production remains the same, that will cause inflation. So the best way is for government to remove that excess money supply through taxation. So a lot of things are going along as I've predicted, and I have said, there's still going to be a lot of money to be made in this, especially if you're a retail trader. Because again, folks, the average middle class person in fixed passive ETFs or in mutual funds and pensions, etc., they only can make money on the way up. Retail traders, large hedge funds, and certain institutions can short the market and make money on the way down. And we will be seeing some sort of large wealth transfer, perhaps. So again, folks, just be cautious, and I will see you in